Hey, this is Matt from InvestiQuant. Today is Thursday, November 12th, 2020, and today is the day of our webinar about auto trading. So if you have not registered yet, go to the link below this video, which is investiquant.com/webinar, and fill out this quick form here with your name and email, and you will be registered to attend our auto trading webinar after the close today. We'll be talking about auto trading, what's possible with auto trading, what kind of results are possible with auto trading, and how you can get started doing it yourself. So that is available in the link below this video. You can register there, and we will be doing that webinar after the close today at 4:30 p.m. Eastern Time. All right, so let's dig into today's study. And today's study is going to be looking at yesterday's close. You may not have realized this, and I was kind of looking at charts and picked up on it, but it wasn't quite so obvious that yesterday closed at a 52-week high. And it doesn't look so obvious because we had that giant move up a couple days ago where we gapped up well above recent highs, but then sold off all day. And that day did not close at a 52-week high. But as we've started to retrace the session, we are now at 52-week highs on a closing level. So not necessarily a 52-week high where the high of the session is at a 52-week high, but the close of the session was at a 52-week high. So I figured we would look at what has happened historically when you gap down following a 52-week high close. And currently we are trading down in 3 of the 4 instruments. So I'm assuming we are going to open lower in the majority of them. This morning, of course, that can change by the time we actually get to the open, but that's what we're going to be looking at, and the stats do change depending on the opening direction. So we'll be looking at down gaps specifically. I'll go ahead and add all 4 instruments here. The setup's going to be based upon getting long at the open of regular trading hours, which is 9:30 a.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time. For the opening filters, I don't know exactly where we're going to be opening at, so I'm just going to go gap down here. This one, the stats can get a little bit better depending on where exactly you are opening at. So when you get closer to the open, you may want to come in here and adjust this, but we'll keep it simply gapping down right now. And then in the price patterns library, this is where I can add that the prior day was a 52-week high close. I'm just going to grab that from the active today section. I'm going to click day after 52-week high close. It actually comes from this category here, new highs within the library. And then I'm going to click view results. And here we go. So these are the results of going long when you gap down following a 52-week high close. Historically, we've got a lot of samples here for all of the instruments. The S&P working with 264 samples, NASDAQ 226, Dow 214, and the Russell 165 samples. And if we look at the win rates on these, they are all coming in at least somewhat favored. The S&P coming in right around 60%, the NASDAQ coming in at 61%, the Dow 58%, and the Russell a little bit more neutral, closer to 53%. So historically, these have closed above the opening price more frequently than they have not. A quick look, average win, average loss. Looks like the average loss a little bit bigger than the average win here in the S&P. That is true in the NASDAQ. Just a little bit bigger here in the Dow for the average loss and the average win, and same with the Russell. So the average losses are a little bit bigger than the average win, but historically it does close above the open more often than not. And you know what? I want to show you one other thing while we're here. I'm going to go into the symbols and settings, and I'm going to change the trade type from long to fade. And since I've got a down gap, fading a down gap is a long trade by definition. Fade just means you go in the opposite direction of the opening price. So a down gap fade would be a long trade. And what I want to do in the exit is I want to change this target to prior close. So that's the 415 price. And I'm going to leave stop end of day. And this is going to tell us what has happened historically when you go long at the open and you target the prior close, or you get out at the end of the day. So let me go ahead and hit view results here, and we'll take a look. All right, so this is that same setup, gapping down after a 52-week high close, and this is based upon going long at the open and targeting the prior closing price. If it does not hit the prior closing price, it gets out at the end of the day. And this one is much stronger win rates, of course, because it does have a target to work towards. So it'll get out there, and then again, anything that finishes between the prior day close and above the open is also considered a win. So whether it hits the target and gets out or it just finishes above the open, those are both considered wins here, and that's why the win rate starts to get pretty high. But generally, this has been a pattern that is a little bit better for gap fades, and that's what this is showing you as well. You got the win rates on these now closer to 78% on the S&P, 80 in the NASDAQ, 79 in the Dow, and 79 in the Russell. So now this is not a trading system per se. You're not going to want to trade it just like this, but this may give you something to trade towards during the day. If you see a setup to get long towards the prior day close, that often has a decent hit rate here in this environment. So I figured I would share that with you as well. Good luck today. And again, our webinar after the close, just go to the link below at InvestiQuant.com/webinar. Put in your name and email address. You will be registered for it. And even if you can't make it, we'll still get you the recording out. But you do have to register if you want to watch the recording. So go ahead and fill that out, and we hope to see you this afternoon.